Hello, and welcome to Cyber Insurance, why it's an asset and not a liability in a cyber event. The word cyber insurance can trigger positive reactions in some critical stakeholders, but may cause PTSD in others. This presentation will shed light on the cyber insurance industry and determine why obtaining cyber insurance is not a liability, rather an asset during a cyber event. The cyber insurance market and policies are not typical and have varied greatly throughout the years, throughout the carriers and throughout the brokers. Having a baseline comprehension of the policy components and the exclusions will be beneficial when the necessity to utilize it becomes glaringly apparent. Attendees will learn a brief history about cyber insurance, gain an understanding of a business email compromise, and learn about the importance of insurance in this situation. People will have the opportunity to ask questions and comprehend the interactions of technical, legal, and financial impacts of a cyber insurance during the cyber event. My name is Dara Gibson, and I am the Senior Cyber Insurance Manager here at Optiv. I am a certified cyber insurance specialist who has been trusted by global organizations to operationalize cybersecurity controls to enhance risk management platforms and increase insurability. I also provide mentorship and education to people within the cybersecurity community to give back to an industry that has provided my family with a fantastic lifestyle. The old adage is, you can take the teacher out of the classroom, but you can't take the classroom out of the teacher. As I was a teacher in my previous life, I have a brief history lesson to share with you all before we deep dive into our case study. Cyber insurance is a relatively new category in the insurance industry. It was created in the late 1990s to provide financial coverage should fines and penalties result from a data breach. Compared to the origination of insurance hundreds of years ago, this is still a relatively new market. The insurance industry has written policies utilizing historical data. For example, automobiles, floodplains, fire damage, and building structures. If you have a home in a floodplain, the broker knows you need flood insurance. However, the cyber insurance industry doesn't really follow status quo standards. In the United States alone, we have 50 separate state regulations for cybersecurity, and we are aiming for 50 separate state regulations in privacy. Currently, we have 8 states with privacy laws that are signed and 15 states that are in the process. This just validates that data is everywhere and needs to be protected and controlled. We also have a fast-moving technology that is changing constantly. How many people knew about ChatGPT just a year ago versus how many people use it every day today? Businesses have had insurance dilemmas for ages, but that was just the business leadership problem. In addition to the necessity of cyber insurance, business organizations are now including new stakeholders, the CFO, the CTO, the CIO, the CISO, the CDPO. This all creates additional conversations about the objectives and the reasons for cyber insurance. Let's look at the state of the cyber insurance market for just a moment. We know that digitalization is increasing data exposure to cyber attacks throughout the globe. Since the online world encompasses all aspects of business today, the risk landscape is even more complex. If you look at the graph provided by the FBI reporting and net diligence data, claims have recently decreased. However, the damage to the business has increased exponentially. If the trends continue, we will see less claims next year, but even more financial losses. This, however, may change on a whim. As we said, the threats are ever changing. The vulnerabilities are constantly being manipulated, and new variants of threat actors are emerging all the time as well. Now you're asking yourself, why should I care? I don't even know how insurance works. Well, we all should care because we are all the employees, and all the employees should create cultural standards of good cyber stewards. Be cyber aware and understand how the policy remains an asset to the company. Cyber insurance can be divided into 3 sections of responsibility. The first party coverage is the financial risk transfer that will respond to the cyber event, cover the business expenses and losses at the time of the event, and restoration. It will also assist in the business interruption coverage during the inoperable timeframe. The second party is actually the insurance company. It is the financial risk partner. And the third party is responsible for the fines, the expenses, and the lawsuits that result from lawsuits, claims, and liabilities of the customers and employees. By understanding these 3 parts, one can gauge the importance of the insurance policy as a whole. Since businesses must obtain insurance prior to needing it, the insurance companies can also provide additional proactive resources to the company. These resources, such as Optiv, can positively impact the cyber maturity of the entity by utilizing common cybersecurity platforms, such as the NIST framework. Insurance companies partner with expert vendors to provide incident response readiness. This may include, but is not limited to, incident response retainers, tabletop exercises, and proactive advisory solutions. The reason for this is twofold. 1, the insured client will know what to do when the situation arises, which will cut down on the overall business operational outage. And 2, the client's cyber maturity level will rise, which will reduce the overall cyber risk. Insurance companies align with appropriate vendors, legal providers, and so that the clients can take advantage of these services throughout the duration of the insurance policy. We've spent a lot of time today talking about how the cybersecurity domain is constantly changing, and therefore causing the insurance industry to adapt as well. Several years ago, a business would identify that they had a website, some data, and created revenue. This established the underwriting criteria for the company. However, this too has changed. One positive outcome over the past few years is that the insurance fluctuation that the cyber vendors and the cyber insurance markets, including the cyber law firms, are now beginning to understand the necessity of transparency and comprehensive standards in communication. Insurance companies are now focused on more technical requirements for underwriting. This means that Optiv was assisting the insurance company by releasing our top 10 cyber insurability controls. We are aiding the technology challenges companies face when in the attainment or renewal process in the cyber insurance program. The insurance market is now requiring additional verification that businesses are now verifying the controls are in place to impact the premiums or the deductibles. According to the FBI, business email compromise or email account compromise is one of the most financially damaging online crimes. This was also the highest cyber insurance claim in 2022 and the fastest cyber insurance claim in 2023. The case study we will review today utilizes factual concepts, but completely fictionalizes the information around them. Hence the reason why I put myself as the sample. In a business email compromise, the threat actor or the scammer may impersonate an email account to fool the victim into thinking the account is authentic. The next step is to send a spear phishing email to the victim. This type of email message looks like, and sounds like it is from the trusted vendor or source. However, the information allows the criminal to have access to all the details, such as passwords and financial account information needed to carry out the scheme. Finally, the malicious software can infiltrate the company network and gain access to legitimate email threads about billing and invoices. To set the stage for our fictitious business email compromise, we meet Alarum. This is a retail entity in somewhere USA. One of their longtime vendor partners, Trusting You LLC, is a construction company that has assisted Alarum in building new store locations and remodeling existing stores. Fred Freestyle is a dedicated 20-year employee of Alarum and responsible for vendor payments. Fred received an email marked urgent from George Washington at Trusting You LLC. Hey, Fred, we heard the great news that the construction agreement has been finalized. We know this project is very important to the growth of the company. As we discussed in last week's meeting, Trusting You requires an advance of $500,000 to begin the construction projects. Due to a recent cyber event we experienced, we had to establish new banking procedures. New wire instructions are listed below. Please process the payment immediately as to not delay the construction. We understand that time is of the essence and both teams would like this payment processed ASAP. Thanks, George. Well, Fred knew how important this deal was, and he had worked with George on various projects for 15 years. Oh, it must have been absolutely tough for Trusting You to experience a cyber event. So he promptly made the payment. 3 days after he made the payment, Fred received an email from his CFO requesting the initiation of the $500,000 payment to begin the project. Fred was confused and forwarded the wire confirmation to the CFO. Well, 2 weeks later, Trusting You contacted Alarum to inform them that no payments had been received, and the project would now be delayed. Again, Fred was confused. He contacted George and told him that the wire was sent 2.5 weeks ago with the new instructions that George had sent. George replied he had never provided new wire instructions and no payment had been received. At this point, Fred contacted his CFO and the general counsel to notify them of the event. Through the dark days ahead, we view the incident response. On day 1, the client calls the insurance company. The insurance carrier contacts the legal team, and the legal team reaches out to Optiv. With an initial scoping call with all the critical stakeholders, the team realizes the events that need to take place. So they send out an SOW, or a statement of work, to the insurance team, the legal team, and the client to get approval. The initial response team can begin servicing the initial starting of this incident response. By day 2, all parties are engaged, and the forensics has now also begun. The legal team notifies law enforcement of the next steps, and the insurance requires that they are also on all the update calls. Day 3 through 8, the insurance monitors the event to steady the course. The legal team makes sure the recommendations are being handled appropriately and ineffectively, the most timely framed portions, and the forensics team continues the investigation as a whole. Days 9 through 10, the forensics is now complete. The legal team initiates the findings reports, and the insurance agrees to cover all of the next steps. Days 10 through 15, the forensics team prepares the report. The legal team prepares all the notification standards, and the insurance team agrees to cover the cost under the policy. The forensic report concluded that the threat actor had been in the mailbox for over a month and had been observing all of the financial transactions. The employee data and other proprietary data had also been accessed. Due to the fact that too many days had passed, no funds were recovered. The legal team advised that post-mortem communications also needed to be issued to clients and employees due to the fact that the threat actor had had access to the financial information of various transactions. The notification would also include the additional tools and procedures that would be implemented to prevent similar situations in the future. Well, what could the company have done differently? Hindsight is always 20/20, and alarm could have and should have increased the overall cybersecurity awareness of the culture of the company. This can be done through cybersecurity awareness training programs about clicking and sharing, carefully examining the email addresses of the sender, and creating a policy and procedure around wire instructions to verify that payment instructions are necessities by calling the person to make sure it is legit. Be especially wary about pressure to act quickly. The cyber-ready culture is for everyone in the organization, not just the IT team anymore. Unfortunately, data events are no longer the rarity for larger enterprise organizations. For this reason, businesses need to see the value of implementing cyber insurability controls and solid cyber insurance policies into the risk management program. Organizations need to be prepared and fully understand that cyber insurance is an asset, not a liability, in a cyber event. Thank you so much for attending this Source Zero Con session. If you have any additional questions, please connect with me through email at daragibson@optiv.com. Thank you very much.